Hi guys, John here, Forex Fire. Just check my phone for 2 seconds. Yeah, so what we've done over the last few days is I got you guys to submit some homework, and it was the basic. We start from module 1, okay, and on module 1 it was the banker's candle stuff, right? Now I'm going to go a little bit more in depth with regards to the banker's candles on this particular video, and this is going to be placed into the analysis training side of things. So it's a little bit more of an advanced sort of approach to a banker's candle, what it is, what it contains, and a little bit more advanced feature on how you can trade from it and use it as an area. Okay, so I'm just going to share the screen. Just bear with me, get that handsome face of mine in that top corner. Right, so I'm on the Great British Pound card. Okay, so wait until my notifications come through. Have to bear with me, guys. Right, so what you can see on here, okay, we scroll right in, you can see we've got an up before the down. Now I've gone wick to wick. This is created what we can also call an order block sort of thing. Okay, now what is happening is we have created, get the magic wand out, we are creating a push down. Okay, and this is where there's a lot of contracts, a lot of buyers were in control at the time, and as we've pushed out of it, you can see we've not had any form of return, whether that be a wick or whether that be the body of a candle. Okay, so this at some point is a point of interest within the markets on a 5-minute chart. Now there's something I'm going to be testing and something I want to sort of implement with my, not so much advanced with where I'm at with my trading, stuff that I can compile together and test and look at, and then sort of distinguish what works and what doesn't. So I'm just bringing this to the forefront. I'm going to show you guys. Okay, so we would be using this as a port of interest going into like the 5-minute area. Okay, from there, just to show you another one, okay, just to show you a good example, we've got this here, this candle here. Okay, so you're doing from wick to wick. Okay, so I'm just going to push this out. As you can see, wick to wick, we've got the breakout. Get this down here. We officially wick to wick. See, from wick to wick, we had the breakout here, the push out. Okay, and we came back in to mitigate. Now mitigation is it's fulfilling contracts that were left behind. Now generally when you get a candle like this, okay, doesn't matter what size it is, it will generally come back in and fulfill around 50% or 0.5 of the area. Okay, this here, if I were to put the labels on, the levels, you can see here, see that, the wick, it broke out, as we see. It's come back in to mitigate what this candle wick to wick was worth, the last banker's candle. It's come out, it's broke, it's come back in to mitigate. Okay, so we know we can get rid of this candle. And you can move these down and move these down and move these down until you see one that is not played out. So we've got one here, candle, okay, wick to wick, to come in, it broke out here. Okay, there's nothing here as yet, but if we stretch this out, look at this, guys, it's come back in, and there is no rule of thumb on how far. It's generally 50%. This one's coming to the 25. So each one of these is a quarter. Okay, so it's come back in, it's tested the 75 area. So again, we wouldn't be interested in this. Now, what I've done on the 5-minute chart, I should have marked some areas out. So what we've got one up here. This was the top one. Okay, there's nothing met that. You can see here I've got wick to wick. We've come right the way across, and what I've done to do that, I've just gone to the cog, gone to text or coordinates, and I've changed that. It was to 1500. Now you can change this to any number. 1500, it'll generally just put it to the end of the chart. Okay, so again, there's nothing come up to test this area. Same with this. We've got this last up before the push down, but wick to wick. Okay, you see, wick to wick. We've had the push out. However, we've come back to more or less test the area, but nothing has come in to our areas of these quarters where we would get a retest. And if we're honest, you are roughly 1 pip away from re-entering the bias of that candle, the up before the down. The perfect area would have been an extra 5 pips, and then that would have mitigated this banker's candle, the last up before the down. So this is still a point of interest in fairness. Okay, let's go a bit further down, and then as we go down, I mean, I went through all these, I back tested all these, and the next available one was this particular candle here. Again, you see the body, wick to wick. We've come to push out. We've come back and we've retested the wick of this banker's candle. Nothing has came in to test the buying power on this. Okay, now this leads me on to this area here. Okay, so as we've come down, I've then gone up to the 4 hour, and I'll explain these parts in a minute. The 4 hour, I've looked back and looked for an FU candle, which is a big candle last down before an engulfing move on the push up, and it's broke this structure here. A break structure is simply, as we've come down, we see this is a low, this has come up, it's created a high because it's higher than this point here structurally. Okay, so what we've looked within this is a banker's candle, and what we've got is we've got this area here, and again it should really be that there to this here. Okay, and as a halfway point, because we are waiting for mitigation to come back to at least a halfway point, so we will put that there, get rid of this. You can see as the order flow has come, we pushed out and we went on a buying basis. So again, if we on the 4 hour move along, there's nothing come back into our unmitigated bankers area. Okay, it's come back and nearly tested, but it's on its way back down. The market's closed on the retest of that banker's candle. Okay, so what I've done is I basically just went to, because these candles are more or less more of the same, I went to the body of that, and if we touch it on here and we put this back onto there, the halfway point, take it back over, let's have a look. We'll go as deep as this here. Let's make sure I'm getting this right, guys. It was this one here, wasn't it? It's the last down before the up. So I was that wick there to that wick of that candle there. Okay, the halfway point is, again, let's get that, not bad guess for the eye. There we are. Get rid of the fibs, go across, and let's get this marked up. This here, down to this here, run about 40 pips stop loss. From there, we are waiting for this to push down into this, which would be the mitigation of this banker's candle on the 4-hour chart. Okay, but what we are using, you'll notice these lines up here. You will see these lines that we created are basically the unmitigated areas of the 5 minutes. So these could be potentially target areas on the way up. So on here, we've got a risk to reward of 1 to 5 on the first area. Okay. The second one, or the second unmitigated area down to the 5 minutes, is a risk to reward of 1 to 7. The third one is a risk to reward of 1 to 7.5. And the last one is an unmitigated area on the 5 minute of 1 to 7.93. So it's mainly a 1 to 8% return. Now, what you could do, what you notice on here, I've done the fibs, okay? And as I've done the fibs, and the price will tend to move in quarter movements. Okay, so what I've sort of done is I'm doing this as if, let's just get this one back in. I'm doing this as if it comes down, hits our Henry. Okay, my rule of thumb would be when this moves up, okay, into this area, I would then move the stop loss area up to the break even. So again, once this hits this area here, this stop loss area would be moved up to so many pips and just above break even. So what would happen is then if the price came up to here as we first think on the quarter, this would be moved, this red line stop loss, just above break even. And if this was to come down, touch here and stop loss out, all is not lost. It just means we've learned something, first of all. Secondly, it hasn't been a loss. Okay, it just means you've took a few pips with break even. And if you can get consistent with this sort of level, and it happens quite regular, it's not to get disgruntled about. You are progressing in your journey. But however, each line that we have, if this makes sense, each line that we have where it comes up touch and it comes up, okay, you are then moving your stop loss from just above break even, where this would have been. If you get your next level touched, you would then move your stop loss to your next area. Okay, and then so on. If it comes up to here, you would simply move your stop loss to the next quarter point. Okay, so what I'm going to do, guys, I'm going to leave this chart. I think I'm going to put it as a chart idea on my Forex fire. Okay, I'm just going to quickly show you something if you're not already following me on this. On the traders, the trading view, okay, you can search for me Forex_fire. I've got quite a good reputation here. I post ideas on here every now and again. It's got my Twitter and my YouTube channel on there. I have over 100 odd followers on here at the moment. I'm going to openly admit I'm not perfect. I don't always get them right, but I have a good sort of knowledge and education of an educated mind on where the price will go to respect and where we would expect to go to. So that's just been a little bit on the video analysis on looking at something what we call like an order block area combined with the banker's candle, and how you can use these areas of sort of interest for a returning point. I'm going to be going more in depth with that, okay, with the boxes on how to do the mitigation and how to use them for TP areas and entries at a later date. But I've just thought, because this week's homework was bankers candles, I just thought I would show you how you can use these bankers candles to sort of be useful for other things other than getting them for an entry. You can use it on the reverse and use it for an unmitigated area for price to return to, because overall price does have to come back. Doesn't matter when, how or where, it's got to come back, because the books on Forex have to balance up. Okay, so again, just share the screen. Back on the chart. Hopefully it'll go back on the same chart for us. GBP card, yeah. Has it kept it drawn up? Or yeah, it has, yeah. Right, so yeah. What we've done, again, just as a short recap, each one of these blue lines is the 5-minute unmitigated area. Okay. From there, the 4-hour, which is what this is on here, I've noticed there is a banker's candle, a big FU candle. On the bottom of here, an area of interest, last down before the upwards engulfed, and it's took the breaker structure. Okay, so that is an area of interest for me. Again, it's coming back down to start and respect this here, which in my opinion could possibly be an entry. It's roughly around about 38 pip stop. Okay, because you've got 388. All you're doing to work that out is you're taking the last number away, and that gives you your pips. On this occasion, it'd be 388. Now, what you could do is another tip for those that are just starting to follow me. You can put on here on your sort of position calculator. You can see you've got something. Let's see, we've got $1,000. Okay, and what you've got the profit, which is in ticks on this. Again, take away the last number. The profit on this, if it went all the way on that 1 to 8 return, it'll be 307 ticks. That is 307 pips, because you're taking away that last number. The stop, again, take away the last number. The stop level is 38 pips. And you've got your entry on here. Now, let's say you want to risk 1% on the trade. Okay. Click OK. It's going to be telling you on the account of start of 1,000. Okay. If this was to come out, you would be getting $79.24, £79.24, 79 yen 24, whichever way you're looking at it. If you lose on 1%, you are only losing 10 whatever. Okay, so it's a great risk to reward on that. But what we're going to do is I'm going to post this in the analysis. If you're watching it, let me know what you think of that little bit of analysis trading. Again, I don't expect everybody to understand it straight away, but taking the concept of the banker's candle and how you can use the banker's candle areas to understand things is going to be imperative to sort of your understanding on where price can return and things like that. So again, just to show you something else, let's take a look. You can see on here, just as an example again, this candle here, it's the last up before a down move. Okay, let's stretch that out again, 50%. Let's get the fib levels in. And you can see the price did come out. It's come back and it's gone all the way as deep as the 75. You see how powerful these quarters are. They'll come in and retest the unmitigated areas on the quarter points. So it's come in, it's tested the 25, it's tested the 50, it's gone as deep as the 75, and then it's come back out. Okay, so as you can see, as we had this as a low point here, right here. Okay, again, this here is the last down before the up. Okay, wick to wick. Another great example. Get this out, 300. Look at this. It's come out, it's come back in, it's come in to test that. And again, guys, I don't make this stuff up. You can't make it up. Get it stretched out. Bang on the half. Bang on the half. You see it? Bang on the half. You can't make it up, guys. Again, if you're finding this useful, you're finding the trading that we do useful, like you say, if you're finding the trading that we're doing useful, if you're enjoying what you're doing, please comment in what you're seeing in the chat or in the homework section. Let me know what you think. or on the analysis. Don't give me a thumbs up on underneath this video if you have understood what I've shown you this as a banker's candle 2.0, and taking that step further where we can show you how and why these areas will get mitigated. Okay, watch the video through time and time again, take notes, keep a hold of your notes, and then go back to the video if required on further things. If you need any further help or assistance, you can reach out to myself, Andy, or Big Mike, which whenever we are free, we'll get back to you. Again, it's not where I'm expecting you to understand it straight away, but you will start to get the grips to it. You can go on the charts, practice drawing these up. Okay, you simply look for your banker's candles, do your wick to wick, draw out, hit the cog, do the 1500, and see where this comes back to play in at, and let me know what your thoughts and what your feedback are. Okay, guys, so this has gone on for around about 15-20 minutes, maybe half an hour. Hopefully you found it useful. Let me know what you think. I will be going through the videos later on, either tonight or tomorrow, through the charts for the bankers candles that you've submitted. Okay, so hopefully you found this video a little bit insightful tonight. See you later, guys.